Right, so good afternoon and welcome. Eamon and I were delighted to be asked to be the closing act again, and we hope you find the next 40 minutes a valuable use of your time. You may have heard from Williams yesterday that the theme of this year's industry presentation is productivity and prosperity. Applying this theme to our own presentation, we wish to spend some time under productivity, sharing with you what the Fiduciary and Innovations Division has been doing during the year. This will also include an overview of our recent thematic review. Under prosperity, we'll be taking a look at the key trends in the sector and how these compare to last year. And finally, under panorama, a look at what you can expect from us in 2016. Now, the main key message we would like you to take away today is that we consider we need to work together. We are reliant on a strong finance sector, and the jurisdiction benefits from a robust, credible regulator. Like you, we are resource constrained and have invested a considerable amount of time and energy over the past year building our Fiduciary and Innovations Division. We expect all our supervisors to understand your business model, to appreciate how you make your money, what makes your business tick, and to really get to the heart of the risks at your firm. Therefore, we need our supervisors to be proactive, curious, and pragmatic. And we're mindful there may be interest in understanding the full range of touch points our division has with licensees, as it's pretty unlikely that you'll have experienced all of these in the last 12 months. So firstly, PRISM. As a reminder, we undertake 4 main types of engagement visits. Firstly, there are full risk assessments. This is a rolling programme driven by a firm's impact rating. That is typically a 4 or 5 day visit to your firm. Secondly, there's 1-day engagement visits. Again, this is a rolling programme, again, mainly driven by your firm's impact rating, but it also potentially might be as a result of a trigger event. Thirdly, we undertake thematic visits every year. This year, we spent a day with 8 firms, and they were specifically chosen to reflect a range of ownership models, different levels of turnover, different impact ratings, but also different types of assets managed. And finally, lastly, there's the financial crime visits. These are led by our colleagues in the Financial Crime Division, are impact neutral, and are based on the financial crime risk posed by your business. On occasion, these are joint visits between the Financial Crime Division and ourselves. So we also analyse a range of intelligence, whether this be through complaints, whistleblowers, or overseas intelligence. For example, we liaise closely with regulators and law enforcement agencies overseas. And clearly, we value the annual fiduciary return, the financial statements, and other data submissions we receive. The online submissions portal has now gone live, and thank you to all of you who are involved with the testing. We've built a number of key risk indicators into this system, and this will help ensure that we're efficient and targeted with our limited resources. Now, we believe there is no substitute to going and meeting and talking with licensees. The culture of a firm can rarely be picked up through reviewing a data return. We've therefore introduced Fiduciary Open Breakfast this year. We've divided our licensees, all 155, into 4 groups, alphabetically based, and we've had 2 events already this year, and there's going to be another one planned just before Christmas. These are a rolling programme, they'll continue next year, and it's an informal setting, and it's a great opportunity for us to share views, intelligence, and just hear what's going on from both perspectives. We've also held a joint session with financial crime colleagues for the personal fiduciary licensees. And overall, it's been really great to see so many of you come along, and I hope they've been mutual benefit. They certainly have been for us. Now, getting out of the office and speaking to people extends beyond Guernsey, and we frequently engage with other regulators, notably the JFSC, but I've also recently returned from a group of International Finance Centre Supervisors meeting, where I made the most of engaging with regulators from around the world regarding fiduciary trends and regulatory challenges, It's often in the coffee breaks of these things that the most value can be gained. Now, our collaboration theme continues with the consultation documents the Commission as a whole has issued this year. A couple that spring to mind are clearly our revision of laws consultation paper, using technology for CDD purposes, and the RATS consultation. Collaboration is also very important with the industry bodies. We have a positive relationship with GAT. Now, in advance of this, I asked Mark Pattermore, the chairman of GAT, to say a few words about our interaction from his perspective. Over to Mark.
I was asked, what does the Fiduciary Division do for its money? And I think from a GAT perspective, we've seen a lot of interaction in the last 12 months, particularly on things such as the revision of laws, the RATS rules, MiFID II, where we've helped the GFSC to shape how that's going to be implemented, to ensure that there's no unintended consequences of the implementation of the rules, to ensure that the impact is actually understood, and where potentially it could have damaging impact, there's dialogue to actually see how we can improve that to ensure that industry accepts it and understands it. It's not just GAT, there's a big interaction, but as part of that process we get involvement in the annual return, we get involvement in the fiduciary, the financial crimes return, not just in its timing but also potentially with regards to its guidance and how it's shaped. I think there is a much better understanding that whilst we can't implement or change anything to do with the direction of travel on laws, nor can we actually change where the GFSC is going on its enforcement or its site visits in that regards. What we can do is help shape the impact of the process that it's trying to undertake. Strong regulation is actually pretty critical for Guernsey. And without strong regulation, and good regulation in particular, I don't know where we'd be. I think there is an understanding between industry and the GFSC that we're as part of a symbiotic relationship. And it's important that we actually work together because, quite simply, we won't exist without each other.
So, thank you very much for Mark for speaking on that and for highlighting the mutual value gained from our ongoing dialogue, engagement and constructive working relationship together. So turning to the innovations part of the division's responsibilities. At the turn of the year, we undertook a survey of all our NRFSB firms. Now, as a reminder, the non-regulated financial services business law, NRFSB law, has typically been used for innovative applications. But importantly, there is a key in the name. It is non-regulated, registered only. And historically, as a regulator, we've had rather not very much information or data about them, and certainly no ongoing frequent touch points. So this survey was crucial because it gave us, for the first time, firm foundations, detailed intelligence of the population at a snap point in time. Now, shining a torch on these firms highlighted that there were quite a number who simply did not require registration. There were also some who decided they did not want to operate within a regime that asked questions. And as a result, the 58 firms who received the questionnaire, 22 deregistered, 36 of the original cohort are still registered, and a further 6 firms have registered throughout the year. So it gives us our current total of 42. Now, following due analysis and consideration over the past year, we've prioritised 4 main work streams. So firstly, analysing the risks. We're really seeking to explore the risks posed by those currently registered firms and look at the appropriateness of the existing legislation for those firms. Secondly is exploring credit legislation. This is something that rose from the conduct unit covered earlier. The headline message from the questionnaire was that the vast bulk of these firms, however you cut the data, were undertaking lending as an activity. something that's currently not regulated in Guernsey. So we're seeking to explore that in the following year, working in collaboration with the Conduct Unit. Thirdly, is to develop clear, consistent and transparent process for considering all innovative inquiries and applications. Now, it's important to note that to date, all applications received have been able to be fully considered within the current legislation. We've not had to turn anyone away, and therefore we focus particular attention on developing tools and signposting for potential applicants. We now have, for example, FAQs, and there's a decision tree live on our website following testing by industry, and you can expect to see more of the same next year. And lastly, investment in stakeholder engagement, whether that be coffees with innovative businesses, attendance at fintech events, or representing the regulator on the local or international stage. Now, you may be aware, in July, PwC produced a report called the Strategic Vision for Fintech on behalf of Commerce and Employment. We commend this report to you, and I'd say it's well worth a read if you haven't come across it already. Implementation of the actions set out in that report are already underway, and we've been delighted to be part of that implementation process. In our humble opinion, having the regulator at the table when discussing what is possible for Guernsey benefits our overall position as a jurisdiction. So in summary, the Commission remains open and engaged in innovation and committed to ensuring that we continue to strengthen the bailiwick's position in respect of consumer protection and innovative businesses. This slide is from last year's industry presentation. So how did we do? I promise I haven't doctored it. Well, risk-based supervision remains at the heart of what we do and is fully supported by the PRISM methodology. The world of innovations has continued apace, and there's been notable enthusiasm and media coverage of the subject. We consider online submissions to be the way of the future, and Stephen Cole covered this morning during his online services section. But in summary, there have been two key milestones. From the beginning of January, all PQs are now submitted via our online portal rather than paper. And from the 30th of October, our online submissions went live. And this is, for example, returns and notifications. Now, as Philip Nicol-Gent covered yesterday, the Commission has been working hard to ensure we meet international standards, and our policy developments reflect that. Crucially, the revision of laws report was discussed at the October States meeting. And following the launch of the Trust and Corporate Service Provider Standard last year, we have been working with other members of the Group of International Finance Centre Supervisors to develop a self-assessment questionnaire. As a reminder, the TCSP standard is seeking to introduce internationally agreed and applied benchmark for all TCSP regulators. It seeks to ensure that consumers of TCSPs should receive the same degree of protection equivalent to those afforded to customers of other financial institutions. Equally, it seeks that TCSPs should be subject to a similar regulatory regime as other financial institutions. Now, it's been agreed that in order to be effective, the standard should be applied internationally. The Commission undertook a gap analysis of our own compliance with the standard in 2014. And as you would hope for from a leading jurisdiction in this space, our gaps were small and are being addressed as part of the revision of laws project. So financial crime visits have continued throughout the year, and there is significant engagement, particularly with the fiduciary sector. And we conducted our thematic into fiduciary decision-making regarding assets under trust. And we've started planning next year's thematic imminently, but more on both of those later. The big question is, will our predictions for 2016 be as accurate? Now, Guernsey is a stable and well-respected location for trust companies. We have had a public trustee since 2002, but she is rarely called upon because she is the trustee of last resort. From meetings we've had this year, it's become apparent to us that there are some misconceptions regarding the role of public trustee, And therefore, we want to spend a moment highlighting what the public trustee is, and importantly, is not. She is someone who can only be appointed in the following circumstances: where the proper law of the trust is a Guernsey law, where the minimum number of trustees is not satisfied and no other trustee is lawfully able to act, where the beneficiaries of the trust cannot be identified, that it is in the interest of the beneficiaries of the trust for her to be appointed, or for the reputation of the bailiwick. The public trustee cannot accept an appointment if there's just been a breakdown in communication between the service provider and the client, or if the service provider and the client can't agree terms and conditions, or if there's been a failure to settle an outstanding debt, or on occasion is equally not appropriate if the assets of the trust are now considered too small to be economically viable to the service provider. And finally, if the company is in liquidation, voluntary or otherwise, and some of the shareholders can't be located or don't wish to accept distribution through a liquidator, that isn't a scenario where we would expect the public trustee to be appointed. These circumstances tend to be the most common misconceptions with regard to the role of the public trustee. And in these cases, the service provider would, if necessary, need to consider applying to the Royal Court for direction in order to establish the correct course of action. Now I'm going to hand over to Eamon to provide an update on key trends in the sector, together with an overview of our thematic review.
Thank you, Gillian, and good afternoon, ladies and gentlemen. And continuing with the theme of productivity, we thought it would be useful to share some key trends and statistics which we received from a combination of the 2015 annual returns and your aggregated financial statements. Oh, excuse me. This slide shows both the number of people employed in the sector, and the black line shows the trend for fiduciary turnover, which is up 4% over the past 2 years. So to set the scene from government statistics, there are currently 31,353 people employed in Guernsey. Of this number, some 3,469 work in the fiduciary sector, which at just over 10% of the island's workforce is an impressive number. Resources in the Fiduciary Division are a select 12, which reinforces the need for us to take a risk-based approach to our supervisory activity. This data has been included in the Commission's annual report and financial statements for the past few years. The black line highlights the steady growth in turnover, but this time over the past decade, while the green and red lines indicate a reduction in the number of directorships and trusteeships held locally for the same period. This confirms the trends reported by licensees towards fewer, yet more complex and high-value appointments. This slide fully supports our key message from last year's industry presentation that the fiduciary sector remains alive and well. This slide highlights the moderate growth in terms of total numbers of fiduciary licensees in recent years. However, broadly, the theme is one of stability. From our perspective, consolidation continues, but generally speaking, the shape of the population has not changed materially. You will note a minor decrease in the number of full fiduciary firms owned by lawyers and accountants, and this is offset by the small growth of approximately 10% of firms owned by both international financial groups and privately owned overseas businesses. This graph further illustrates the trends from the previous slide in respect of the stability of the assets held by the privately owned local firms and the not insignificant growth of assets held by both the overseas and international groups. This also supports what we have been hearing anecdotally during our ongoing discussions with licensees. A small note of caution in respect of this slide: we are aware inconsistencies exist in the valuation of property-related assets. Some licensees value assets at market rate, others at purchase price, and some value property on equity having deducted any related debt. That said, the trend is clearly a positive one. Turning to new sources of business. This slide represents the number of new client relationships generated in the past year and is taken from the annual return. Broadly, no discernible change in the trend regarding sources of new business when compared with 2014's data. We would highlight that our guidance note for this section of the annual return encourages a best estimate, common sense approach. We recognise that global wealth poses challenges to the completion of multiple choice returns. Finally, business from China, Russia and the Middle East, we continue to hear as a focus for new business development attention, and particularly in respect of new wealth generated in the Asian market. Turning to the recent thematic review entitled Fiduciary Decision-Making in Respect of Assets Under Trust. So what was our rationale for choosing this specific topic? Well, firstly, it forms a key part of trustees' roles and responsibilities, and secondly, it is an area where we are notified of a number of complaints. The thematic review enables us to gauge how well decision-making is executed and, importantly, documented by local firms, and assists us in trying to establish both good practice in the area and to further understand real challenges faced by the industry. The questionnaire, which was sent to all 155 full fiduciary licensees, focused on fiduciary decision-making during a portfolio life cycle, including setting the initial portfolio strategy and periodic performance reviews thereafter. It specifically didn't focus solely on investment portfolios, but rather looked at a range of trust assets and how they are managed, and these also included property and lifestyle assets. It was certainly a challenge to produce a questionnaire which could be sent to the huge variety and diversity of firms which make up the local fiduciary sector. Having issued the questionnaire, we subsequently conducted one-day on-site visits to 8 licensees, who, as Gillian has mentioned, was chosen to provide a cross-section of the sector as to the firms selected representing differing PRISM impact ratings, different firm sizes, different types of assets under trust, and again with differing ownership structures. And a thank you to all those firms that we visited. As mentioned, the aim of a thematic is to share good practice across the sector and to identify areas for improvement. So let's take a look. So areas of good practice which we saw. A number of firms have a clear, well-designed investment review process which is entirely appropriate for the assets they hold under their trusteeship. Where a third party's investment review information is used, it is important that the trustee can adequately challenge the information and subsequently implements such information in a way which is beneficial for the objectives of the trust. Areas for improvement include the following. In some cases, fees and retrocessions are not clearly communicated to the beneficiary. It is becoming less common for a trustee to accept retrocessions. However, in instances where they are accepted, it is important that the trustee is fully transparent and specific in communicating this. Equally, it is important that fee notes are clear and that there is an agreement between both the trustee and the related parties regarding frequency and nature of fee reporting. Such proactivity mitigates the risk of any future fee disputes. It is also important to make the point that the trustee must permit trustees to receive retrocessions, otherwise they may be acting in breach. Our site visits highlighted that some trustees' minutes do not provide enough detail, especially in relation to the rationale behind decisions. Having clear, unequivocal minutes ensures that a trustee can refer to such records in explaining why a certain decision was made and what was considered as part of the decision-making process. This level of detail can also reduce litigation risk into the future. In order to review performance, the Trust must have measurable objectives on which to base decisions. We frequently saw well-developed objectives for investment portfolios. However, it was less common for other asset classes, for example, in relation to property. To reiterate the point made by Simon Godian yesterday, our Director of Enforcement, if the investment process does not look and feel right to you as fiduciary professionals, then you have a responsibility to challenge and question it. We are still analysing our findings from the thematic and aim to issue the final report later this year. Now I'll hand back to Gillian, but please know that you haven't seen the last of me today, so brace yourselves.
So throughout the year, Eamon and I have also, like Investment Division, been asked to create case studies reflecting what we see on on-sites. So we've pre-recorded a fictitious role play, which includes real examples, real things that we've been told over the past year. Now, as you listen, you might want to take note of the key themes and the key messages we're trying to get across, because there will be an opportunity for a recap afterwards.
You're about to see an extract from a fictional engagement visit to a medium-sized local trust firm. The aim of the clip is to highlight some of the actual issues that we've seen during on-site visits this year. The clip shows Sarah and Annie from the fiduciary team interviewing James Brown, the managing director of the local firm.
So James, thank you for making time for us today.
Good to see you both again. Can I start by apologising on behalf of Fred? I'm really sorry, but he's been asked to attend an urgent HR meeting, so I'm afraid he won't be here today.
Okay, well, if there's anything we need to pick up with him, we might well arrange a separate meeting later.
No problem, thank you.
But as you're aware, this is an engagement visit, so primarily we're looking to catch up on the significant events at the firm since the last time we saw you.
Okay.
And you'd advised us of a few things, so an acquisition by Dynamo Group, Fred Oates joining the board as the finance director, and also a change in your compliance arrangements.
Yeah.
So perhaps we could start with Dynamo. How did the deal come about?
Well, quite simply, for some time I've been thinking that we needed to form a relationship with a larger organisation, not just to get an injection of capital, but also I think size matters a lot in our business. And Dynamo were one of the few organisations who was prepared to effectively form a relationship with us without buying a total shareholding. So they've invested 60% of the equity of our business. The idea was that they would continue to give us a complete autonomy, and that we would, on a day-to-day basis, continue to run the business.
So we noticed that the board are based in Singapore. How does that affect you in terms of maintaining your strategy?
Well, Annie, that's a very good question, because as I say, the idea originally was that we would continue to have a lot of autonomy. In reality, they're a very dominant shareholder. They particularly motivated by the profitability. So the strategy is now driven by Singapore. They've put somebody on our board as an independent non-executive director, and really they are driving strategy from Singapore.
Right. And how has that affected the risk exposure of the Guernsey firm then?
Well, as you know, Sarah, I've always been a very conservative in the way I've run the business, but now, because we're so focused on the bottom line, we are having to watch our costs extremely carefully. And so, although I think, on a day-to-day basis, I run a tight ship in a very conservative approach, in reality, I think our risk exposure has increased simply because we've had to run such a tight operation.
Right. And so moving on then, you appointed Fred Oates as finance director about 18 months ago. What was behind that decision?
Well, I thought partly because we were forming a relationship with another shareholder, it was important that we, if you like, improve the quality of the finance function. Fred had all of the qualities I was looking for. He's a chartered accountant. He's been in one of the big four. He's got some relevant experience with the bank. And indeed, he's worked out very well. I mean, he's a very much my right-hand man. The drawback is that I've had to widen his role, as I was saying, because of our constraint on our expenses. So he now covers not just finance, but the accounting, HR, IT, etc. So he's got a very wide role.
We noted last time that certain members of your management were stretched in their function. Could this possibly be something which could happen to Fred Oates?
Well, I think he likes being stretched, but I would be lying to you, Annie, if I said that, you know, he had a bed of roses. It's a tough job, and he's got a very, very broad function. So he's moved from being effectively a finance director to being almost a head of operations.
Okay. And you recently appointed Precision as outsourced compliance providers. What was the rationale behind that move?
Well, I should have also said that is another of Fred's responsibilities. He is responsible for the relationship with Precision. I think my motivation in appointing Precision was that an organisation of our size simply is not able to have the volume of expertise as employees within the organisation. So appointing Precision enables us to have very high quality compliance people in the background, and that we frankly couldn't afford if we were going to employ them ourselves within the organisation.
Right. And when we reviewed your board minutes, we could see that compliance is an agenda item, but it's not often actually discussed by the board. Why is that?
Well, it's a good question. When I did the arrangement with Precision, I made it very clear that not only did I want very high quality management information for the board, but I wanted it in a timely manner so it arrived before board meetings. And to be fair to Precision, they have produced very high quality management information. So the board get it before the board meeting, and I always say to the board, you know, are there any questions on compliance? Now's your chance to ask Fred. But in reality, because there's an awful lot on the board agenda, and because I think the board are comforted by the fact that Precision are really taking care of our compliance, I don't think it's something which ever crops up as a more detailed discussion.
Would you be able to give us an update on your ongoing PII claim?
Well, Annie, I was going to raise that anyway, and that has proved to be an absolute nightmare. When I notified you of this problem about a month ago, it had just been brought into my office. I, as always, said just make sure we had notify our insurers, and the reply came back within a week that we're not covered. Now, I'm still trying to argue that and to read the small print, which I have to confess I've never done before, but it does look as if it could be a very nasty shock for our profit and loss account if we've got a claim of this size. I'll obviously let you know as soon as I get any further information on that.
Thanks, we'd appreciate that, James.
Thank you.
Clearly, this is a mock-up exercise, but it does highlight some real issues both for the firm and indeed for the Commission. Firstly, the ownership structure. What challenges will that present to the local board, and how will they be able to demonstrate that mind and management of the business remains within the bailiwick? Secondly, Fred Oates, the new finance director, is clearly a really busy guy and presents significant key man risk to the business. What would happen if Fred was unavailable for an extended period? We'd like to meet with Fred to understand how he discharges his responsibilities and what other support he has in place. Thirdly, are the board really discharging their own compliance responsibilities? The fact that issues aren't being discussed at board level raises a red flag, and it could appear that the board have outsourced not just the compliance function, but indeed the compliance responsibility to Precision, which is unacceptable. And finally, with regard to PII requirements, it's important that all boards actively ensure that the policy they have in place is entirely appropriate for their lines of business. And we know this is a real issue for local firms at this time.
So why do these themes matter? Well, we've raised them all because they are live issues at boardrooms across the bailiwick, and they apply, we consider, to most of the licensees in this room today. Now, hopefully this clip illustrates the alignment of objectives between the regulator and industry. Neither of us would want disempowered local boards or undue risks being run and not mitigated. If you haven't had a visit from us yet, this gives you an insight into the typical dialogue that we'd be holding. which, linking back to my opening remarks on the team, is only effective if our supervisors understand your business model and can provide constructive challenge. This is a summary of all the risk mitigation programme actions the Commission has issued since the inception of PRISM. As a reminder, following identification of a risk, usually from an on-site visit, an RMP action or actions may be issued. But I would pause to note that I'm just scene setting here. Not all visits result in RMPs. This slide relates to the entire finance sector and isn't purely fiduciary. But you'll note the common themes, common actions are in the areas of financial crime, governance, operational risk, conduct risk, and strategy and business model risk. This also represents a fair reflection of the risks in the fiduciary sector. So drilling down to some of the specific RMPs for the fiduciary sector this year, they've included limited board challenge, historic and outdated policies and procedures, often off-the-shelf products rather than specifically written for that business, a group strategy being driven from outside of the bailiwick, lack of oversight of outsourced relationships, inadequate insurance cover, inappropriate investment decisions, and missing Know Your Customer client due diligence documents. Now, as you'll be aware, a key part of PRISM is our annual thematic review per sector. Last year, we highlighted a number of potential topics, and the 2 completed thematics for the fiduciary sector are now shaded in grey, and this leaves you with 6 potential themes for next year. Now, a note of caution, not all thematics follow exactly the same course. This year, we sent questionnaires out to all licensees and followed it up with on-site visits. But next year may look different. It may just be, for example, questionnaires, or may only be on-site, or maybe some other combination, maybe telephone interviews. It doesn't need to look exactly the same as this year's did. But what it does do is enables us to identify and really understand emerging risks in the sector. So finally, what can you expect from next year? Our primary objective remains the same: to execute high-quality, risk-based prudential, financial crime and conduct regulation, which we do through PRISM. For example, thematics, full risk assessments and engagement visits. Therefore, ultimately, you can expect more of the same. But continuing with the evolution theme, you'll have all observed the introduction of electronic PQs at the start of this year and the launch of online submissions. Now, this is a significant investment for the Commission, and we're looking forward to making the most of the automated key risk indicators going forward. I think this development really marks a change in our interaction with you and ensures us to be very focused with our resources and efficient, we hope. Now, as highlighted earlier, we continue to advance our 4-pronged strategy for innovation. This will include recommendation of the PwC recommendations and analysing the risk posed from the current population. It also includes developing appropriate future-looking legislation, developing a healthy infrastructure for potential applicants, and continued stakeholder engagement. Ultimately, we are focused and committed to capitalising on the bailiwick's strengths, and this does include a short commute for a conversation with prospective applicants. Now, you may be aware we've created a centralised authorisations function, and this is represented by John Dunford on our panel. He and his team are responsible for all new licence applications, although they clearly still liaise closely with the regulatory divisions. The key responsibility of the authorisations team is to act as a robust gatekeeper. In our experience, it's far more cost-effective and efficient to have a robust gatekeeper and to keep a questionable firm out than approve them and then later embark on costly enforcement action. We've already declined a full fiduciary application fairly recently and will be maintaining the same high standards into next year. Now, whilst on the subject of applications, I have a plea for you on behalf of my authorisation colleagues. Please allow the Commission realistic timescales for turning your approaches around. For example, discretionary exemptions have a 14-day turnaround time, but we're frequently being pushed for a much shorter period, which is difficult because often we're waiting for information from outside the bailiwick or from third parties. Now, we're going to, on revision of laws, continue our progress with that, including next year drafting and implementing secondary legislation. And in order to ensure Guernsey is regarded as a credible contributor to international regulatory policy, in the TCSP space, we have been leading the way with the TCSP standard. As I mentioned earlier, we're currently moving into initial jurisdiction assessment, and we hope to expand this into peer evaluation over time. Now, Eamon and I have stood here today, but it's important to credit and thank the team that supports us, and notable thanks to Jeremy, Annie and Sarah for their starring roles in the roleplay. Without their support and progress, nothing we've outlined today would have been possible. So to conclude, I repeat the key message that we'd like you to take away from today. We need to work together. We're reliant on a strong finance sector and consider that the jurisdiction benefits from a robust, credible regulator. We now have some time for some questions.